Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. And we have Brent crude oil trading down this morning, down about 0.75% under that $75 handle, which it had closed above at the end of last week. Friday, it had closed above 75. Now we're dropped down again in early trade in Asia. You'd say, in the scheme of things, more or less the same sort of ping pong that's been going on. This is the week in which we start our sort of official countdown to the OPEC meeting, which is on December 1st, so next Sunday. Peter McGuire, CEO of XM Australia. Kick us off this morning, Peter, with what you think OPEC need to agree at this meeting on December 1st in order to get an average price of $75 a barrel, the number we're sitting on now. In order for that to be the average price for Brent in the first quarter, what do you think they need to agree to do at their meeting at the end of this week?
Well, Sean, and good morning and greetings from Sydney to everyone. What we've seen in the last couple of weeks has been quite dynamic as far as geopolitical concerns rolled into it. I think they're very much the status quo. Are they going to keep these cuts, Sean? And what is the fabric of the argument that OPEC are putting forward? And I think they've got to look at, with so many components of this, with the likes of the Russia situation seems to be gaining momentum as far as Ukraine and, the fabric, all of that rolling across as OPEC. Are we going to see a continuation of prices holding steady at this? We've also got a very volatile US dollar post President Trump being elected, and that's had a very, very solid uptick as far as US dollar index over the last couple of weeks, breaking 107 and now back under 107 in Asia trade today. So I would think to keep the status quo, Sean, but the variables that go into this equation are geopolitical concerns, and is this going to escalate tremendously in December and possibly Q1? And then what happens as far as US dollar and Fed policy, and of course ECB with structural weakness in the Eurozone, and it seems to be galloping away, the US stock market. And growth is relatively good, but they're still worried about the inflation story. So I think OPEC have got their hands full, Sean. They may have to just take a little bit of a backward seat and be happy at 75 because they may shoot to the upside. But I think there's just so many different variables that go into this whole equation as far as global economic situation.
Let's go to Michelle Bachmann, principal analyst at Lloyd's List Intelligence, to pick up on that sort of geopolitical risk factor, which has kind of elevated prices in the last week with the growing sort of missile face-off between Ukraine and Russia. But nonetheless, Michelle, the question to you is, in that, are we seeing any stress, additional stress on the high seas? Are flows moving? Are tanker rates changing? How does the high seas tell us this geopolitical risk premium?
Well, there's been two interesting developments since we spoke last. I mean, the first one is that Russian Urals crude has fallen below, for some trading days, below the $60 a barrel price cap, which means that we're seeing some European players return to the market. So in that respect, the falling oil prices have actually opened up the market to European players again. Secondly, are we seeing a geopolitical premium out on the water? No, the Houthis are still, although their attacks have diminished, they're still a threat, and a lot of European-bound cargoes are sailing around the Cape. Russian crude still sails through the Red Sea. So in that respect, everything is normal as usual. And really, from where I sit, looking at freight as a component of that, I see very much a look at the fundamentals, which is that, oil demand growth has slowed. In terms of OPEC, they have supply challenges next year with Atlantic Basin crude supplies that aren't members increasing their supply. So, overall, I think that things are looking rather bearish.
Just follow up on that, Michelle. Has there been any structural, any notable shift in any of the markers that you watch since the election? We've seen a variety of things emerge in other spaces, financial markets. We've seen the equity markets go bonkers and so forth. But is there anything that has notably shifted? The dark fleet has got more, it's got less. Any change moment on the high seas since the election of Donald Trump?
Well, actually, no. Freight rates have remained counter-seasonally low. Normally, I think I said last time at the podcast, we would expect freight rates to increase for crude tankers as additional crude supplies were sent to refiners so they could increase their supply of heating oil for the Northern Hemisphere winter. That hasn't really happened this year. In terms of anything else, there was concern that there was going to be a front loading of oil to offset any tariffs. We haven't seen that either. So I think, we're just seeing, this, up and down volatility, very sensitive to news like spikes. But overall, when you look at things, it's range bound.
Let's go to the downstream narrative. What are we seeing there? Alan Gelder, Downstream Global SME, VP Refining, Chemicals and Oil Markets. You need an acronym. Commodities Research at Wood Mackenzie.
You probably don't need to read it all out, Sean.
Yeah, exactly. But nonetheless, get a sense of the downstream picture from Alan Gelder's, obviously sitting in the UK, but as OPEC looks to make decisions at the end of this week for the new year, what tea leaves should they be reading in the downstream? What does refining tell us, and margins, etc., at the moment?
Refining tells us that sort of the downstream product supply, there's ample supply, there's broadly ample stock. We've seen classically stocks have been tightening in the US, but they've started to build. We've got reasonably high stocks of diesel gas oil in Europe for winter heating. So in terms of the downstream sector, we're expecting some improvement in crude runs as we go into December. But classically, the issue is with downstream is Q1 crude runs are lower than Q4 by around about 1 million barrels a day. So the challenge is that pull on crude from the refining system isn't a Q1 thing because there's just far less people driving. So the challenge for OPEC is managing that imbalance because it's the period when classically crude inventories build.
I didn't catch that last comment, Alan.
Q1 is
the time of year when
crude inventories build.
Crude inventories build. And is that happening? I mean, we had evidence. I mean, are we near the 5-year averages, etc., that OPEC would typically watch?
I think generally we're below, but if we look at what's happened to sort of the global crude inventories we track with satellite, they're always very volatile, but they've had a downward trend from May to October. Now they're broadly stable. So the expectation would be some build in inventories during Q1 just because of lower crude runs.
Peter, looking again at our friends in China, your next door neighbors, the sort of anchor to this oil market. Today, we had a China central bank announcing an injection of $124 billion into the banking system. Another sort of part of this step-by-step drip feed stimulus. Your thoughts on this move and its sort of dot connecting with other previous stimulus moves? Does it have an impact? Will there be more of this as we get into the new year? Peter's on mute. Peter's on mute.
Sorry, Sean. I'm interested to see the Asian equities today. Everything else is green, and some of the markets are up extraordinarily, very, very strong. And the only market that's down is China. So that just shows us. So yes, I would say that as far as stimulus is concerned, there'll be much more that needs to be delivered come January and February in Q1, and naturally where President Trump plays on that as far as tariffs and so on. So the internal engine of China needs to be very much engaged, and whether they're able to achieve that, Sean, it's just a time and tell sort of principle. We're just sitting here and we've just got to wait for it to unfold. They've had a very strong run up as far as Chinese equities in the last couple of months. So market sentiment has been relatively strong. You've just got to wait and see again, where we're going as far as GDP, what happens with the overall theme across China, and whether the world returns to really that, insatiable appetite for finished commodities, and whether there's, everyone wants to, stimulate their own economies and basically, infrastructure and build and buying Chinese finished steel and goods across the world. But at the moment,
do you think they're holding
consumption?
Do you think they're holding back any of their powder in terms of the waiting for the Trump actual, not the sort of the rumor or the fairly robust language, but actually see what the policy is and then have some stimulus left in the tank, so to speak?
Yeah.
Is there any expectation around that?
I think so, Sean. Delayed firepower, certainly, because they're not going to come out of the blocks and just, throw it all on the table now. This needs to be a drip feed. They need to, it's their brinkmanship here. There's a lot of, again, if you're looking at central bank buying, their appetite for gold has been extraordinary. And I think it's 37 straight quarters of, record amounts. So there's the first part. The second part is, as 25 wears on, next year is going to be very interesting from a Trump perspective. And should there be, the World War III start to, rattle its cages a little bit, what happens to China and where does it align itself naturally with the likes of Russia? It's going to be very interesting how that plays. So from a geopolitical standpoint, I think China's sitting on its hands. It's watching everything roll. And they've got much more firepower if they need to really throw it. But you can't get away from debt to GDP at about 366%.
Michelle, one of the questions, and I suspect OPEC Plus or somebody in their research department will be reading your articles and your colleagues as to, how easy or not will it be for if the new Trump administration wants to follow through with its declared intention to sort of shut back in Iranian exports. Where's the underbelly? Where do they target? Is the dark fleet easily closed downable, to use a George Bushian new word? Is it the insurance in London? I mean, where do they target? Is this targetable in a way like it was 5 years ago? We just go back to the same playbook.
Well, good question. So we're talking about 1.6 million barrels per day at the moment, and perhaps about 200 tankers. At the moment, about a third of those tankers that are delivering Iranian crude are actually sanctioned. So what we're seeing is that even though they have, effectively been sanctioned by the US, they're still delivering crude to China. So we're seeing that they can operate largely outside Western regulation. How would a Trump crackdown look? I'm not really sure, given what's happening at the moment, that sanctions are going to be an effective way on these ships to stop Iranian flows. I mean, it's deeply discounted, and China has also taken Russian oil on sanctioned US vessels as well. We do track those vessels to Chinese ports, and they're largely going into what they say is the teapot region. But nevertheless, and any intervention is going to be very, very interesting, and what form that
Would
takes.
it have to be quite robust? I mean, literally, boats on seas with guns and stopping vessels. I mean, how robust would it need to be to stop what is now a fairly bedded in process? And although going to one destination, does that make it easier?
Well, I mean, firstly, all ships have under maritime conventions, have the right of innocent passage. So stopping vessels, unless they're falsely flagged, is not going to be an option. The most robust response at the moment is to designate these vessels, and that's happening, and it's not working. You can crack down on as many Western marine service providers as you like. They're largely out of the market. These vessels are, their insurance is unknown. Their flag is now with a lot of, they're flagged, which is, they're operating under the auspices of the country they flag with. Panama, for example, the world's largest flag by shipping number. I met with the head of the Maritime Authority last week. They're cracking down on those vessels that they flag that are shipping Iranian oil. So they're just going to go to largely further unregulated countries. So what we're seeing is a regulatory race to the bottom that further embeds those ships out of the Western system. So can the flow of Iranian oil be stopped by US sanctions alone? No, you would need the cooperation of China. And I'm not sure that that's going to be part of an Iranian crackdown.
Alan, just looking at the Chinese situation, obviously we have a significant refining capacity that does choose from month to month or from period to period how much they will export in products. What is that doing at the moment? We saw a big surge in imports, or we are seeing apparently in this month of November, the volumes of oil, crude oil coming into China is back around 11.5 million barrels a day, according to reports. But where does that leave the refining and its capacity to export or willingness to export into the Asian markets?
This year, Sean, this year's been really interesting. Just building on what Michelle's been saying, we're hearing chatter that some of the crude is Iranian crude is being returned to Malaysia as Malaysian blend. So there does seem to be some certain reluctance or less willingness just to directly take it, and it's being tagged to sanctions. But we're not sure of whether that's the truth or there's some underlying factors. China's crude runs this year have been lower than 2023 because basically domestic market has been weaker because refining margins have dropped in Asia. Actually, they're not fulfilling their export quota, which is quite unusual. We considered there might be a push to export more to try and hit the 5% GDP number, which we haven't got. But China's changing its regulation in terms of VAT rebates that it gives on imported feedstock. And so it's basically reducing the margin that they make on exports because they don't get the sort of the VAT rebate. So the economics of exporting for them, even if there were no change in sort of the market they're exporting to, would deteriorate. So putting a few things together, we think 2025 China crude runs will go up. But that's largely because of startup of some big sophisticated machines, so Yulong, Zenhai, Daxi, and I probably butchered the pronunciation. But what that means is actually there's probably likely to be a threat of rationalisation on those teapots within Shandong because they can't export directly themselves. They need somebody to do it for them, and in a sense that it's getting more challenging for them to be able to do that, along with regional refining margins being weaker, so reducing the economics. So there's a few things that suggest.
Would they be more vulnerable to a more robust US sanction regime? Would they continue to navigate through it, or would the teapots retreat, you think?
We're expecting the teapots to retreat because of the challenge they have of selling their material. They can't export directly. The rebates they're getting are more challenging. There's a lot more scrutiny on their behavior and what they're reporting. So we think we've got them sort of rationalizing a bit further. But generally, in aggregate, China crude runs go up just because of the big machines that are starting up. So there's lots of moving things happening around China. But in terms of what the market's really been focused on, China crude runs, we think 2025 should be stronger than 2024.
Let's go to the survey question, which sort of focuses on where we started our conversation this morning. What do OPEC Plus need to agree to do at the December 1st meeting to ensure a $75 Brent average in Q1, which is kind of where we are at the moment? proceed with supply increase that they are currently planning. That's the current course of action, unless it's changed. From January 1st, they're due to start to unravel a 2.2 million barrel a day of cuts. And UAE is also due to increase its quota from January 1st. Or do they extend the cuts another month like they did to from December 1st to January 1st? They announced that a month or so ago. Or do they extend the cuts for 3 months? Do they need to do that? Or do they need to do it through 2025 in order to get this 75 average? They got 80 average more or less this year. To get 75 in the first quarter, which of these things do they need to do? Proceed with current plans, extend cuts a month, extend 3, extend through the whole year in order to get that strong 75, or else they might be relying on geopolitics. If they want to have the fate in their own hands, what policy do they need to take? Press your buttons there. Peter, I wanted to take the opportunity to slightly put you on the spot, but nonetheless appreciate you're not a geopolitical analyst, but you are a very, a very alert Australian, and I wanted to get your views on your government recently took a step that I thought was rather unusual, and it plays into the wider geopolitical narrative that we're facing here in the Middle East, and that was Australia backed the UN resolution of recognizing the permanent sovereignty of Palestinians, which is a fairly significant departure. You would expect that move was obviously made by a lot of other countries, but Australia, which typically walks hand in hand with Washington on such matters, has departed. Any insights you could share on that for us? How should we read that?
I think, Sean, first off, if you look at the demographic of Australia, 26 million people, and it's a young nation. It's a young nation, and it's a and Michelle would probably be able to add a little bit of this as far as being a fellow Australian. The first part is that our population boomed in the last probably 40 years or 50 years. And when I was at school, at one stage there, I think we were lucky to break 10 million. We're now at 26 million. And naturally, a lot of those are migrants, and a big percentage. We've got a large Lebanese, Christian and Muslim population. We've got a large Palestinian population. And I actually live in an apartment complex at good old Coogee Beach, Sean, and the gentleman that lives directly underneath me is a Palestinian. So, and his mother and sister are in a camp there. So they are very much a fabric of our society. And I feel as though from a humanitarian side, there was a groundswell of quite probably and quite possibly a backbench and then across caucus and across government itself, that it permeated all the aisles of power to say, or corridors of power, that maybe we should look at a support of Palestine. And it just seems to be very much along with, I think, the general consensus in Main Street of what people are feeling. So I'm not here to, I'm here sitting in the middle of the fence, Sean.
Yeah.
There's no doubt that there is a very large proportion of our population has very dear sentiment towards the Palestinians.
Well, looking at that sort of through the other direction, Peter, that would be obviously this decision coming on the eve of Donald Trump coming into power, who's typically quite hawkish and aligned with Netanyahu. What would the current governments of the current government of Australia's political alignment be, or how will that sit together with the sort of Republican and the far right element of the Republican Party, this Australian government? Because obviously these are key security allies in Asia.
Absolutely. Well, I do know that President Trump, or President-elect Trump, has been meeting with world leaders in the last couple of weeks, and it's been a revolving door with how many he's met with. And I'm not sure whether he's met with our Australian counterpart or our people, but I'm fairly sure that that would happen very, very shortly because of the relationship that Australia has demographically, and of course with the US being our big brother. It's always been told that they'll look after us. Whether that's going to happen or whether that's evaporated, I'm not sure. But it was very much a part of the US went to war, we went to war, and we followed the US, and that was, they came to our savior in the sense of the Japanese invading through New Guinea, and what they did as far as, we all understand what happened in Japan. So
yeah, I mean, I think it's an interesting step in the context of Australia. I mean, it's hard to read into too deeply right now, but I noticed that Kevin Rudd was busy deleting all sorts of former commentary from his Twitter or social media feed as the ambassador, Australian ambassador to the Washington. We'll watch that space, might be the thing to say. Michelle Bachmann, wanted to get your thoughts on where we talked earlier about the ability to enforce the sanctions, the US coming in and a new regime, how it's likely to behave. But one of the spaces I wanted to get your thoughts on if indeed there is anything to look at there, and that is the new Labour government's efforts to re-engage a warmer, stronger relationship with the Europeans. Does that help or make any difference for the sort of efforts of policing the high seas? We saw events recently of a Chinese vessel supposedly getting involved in naughtiness of cutting up telecom cables in the Baltic Sea. But I'm wondering, Europe's efforts with a British alignment, greater alignment with Europe, does it make much difference, or your thoughts on that?
I'm glad you raised that, because what's happening in the Danish Straits now is a contemporaneous maritime security challenge to watch. Just to sort of fill in listeners, the Chinese flag bulk carrier suspected of cutting those cables in the Baltic has been, we don't know if it's intercepted, but it's idled in the Danish Strait, and it's surrounded by a Danish naval patrol boat. Now, as I was talking earlier, under the Treaty of Copenhagen and this UNCLOS, this maritime convention, that ship has the right of innocent passage, and it can only be stopped if it's not in innocent passage. So the coordination of those Scandinavian authorities in actually challenging that ship's right of innocent passage as it stands now is really insightful, and perhaps can provide a pathway to how they deal with these ships carrying Russian crude from the Baltic, especially because, as we do know, these ships are poorly maintained, in terrible condition, and probably in breach of many technical and other safety conventions. The UK government has said that they're going to be radioing and asking for proof of marine insurance as these ships go through the English Channel. There are about a dozen a day, about half of them are laden. And we haven't really seen that tested yet. So, what happens in the Danish Straits and what happens to that bulk carrier is going to be really, really interesting. Can it be stopped? Under what grounds was it stopped? And can those lessons be passed on to the Dark Fleet? So watch this space, Sean.
Finally, let's close up, Alan, with getting your thoughts on exports out of Russia. Okay, here we have extend 3 months or extend through the end of 25 to get the $75 average. It'll be interesting to see how that plays out. But Alan, I want to get your thoughts on Russia returning to the export markets on the product side. Is that a big deal, not a big deal? Your thoughts?
Sure, we've seen lots of refinery maintenance. We expect the refineries are coming back, but sanctions are making it more difficult to them to complete their maintenance. Globally, Russian distillate exports are very significant, but actually, given the status of where we are now, of a lot of refining capacities come on over the past year, they're less and less important. The product markets, as we go through next year, are not going to be as tight because of all this new capacity that's coming on. So slightly lower Russian product exports shouldn't necessarily be much of a challenge to the global refining system. But we're still expecting them to export reasonably significant volumes.
And we'll have to see. I mean, with all of I think that's probably the first port of call, really, no pun intended, in terms of what's top of the inbox with Trump, the Russian war in Ukraine and its resolution, and what the sort of dominoes from all of that will be in terms of energy flows. we'll wrap it up there. We've got, as we started, Brent crude oil trading a little bit down this morning, down 50 cents at 74.67. WTI $4 back from there. We'll see if this week is a softening of the geopolitical tensions, and with that, prices dropping back, as it seems its natural order is. When the geopolitical tensions dilute, it drops towards the 70 mark. When they get elevated, they rise again. And the news today of a possible, and I would not in any way want to over-egg the pudding on it, but some kind of a deal in Lebanon seems to be inching closer. Meanwhile, the Israelis continue to drop large bombs on innocent civilian people living in apartment buildings in Beirut. But the politics seems to indicate that there is migrating towards a deal. Let's hope so. Thank you so much. We'll wrap it up there. Peter Maguire, CEO, XM Australia. Really great to have you jumping in this morning. Thank you, Peter. Alan Gelder at Wood Mackenzie in the UK, and Michelle Bachmann, also Lloyd's List Intelligence in the UK. Thank you, guys. Have a great week. Catch up with you all soon again. Bye-bye.
Thanks, everybody. Cheers, guys.
Cheers, guys.
Bye-bye.
Bye.